Today is Monday, March 7th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, start with the grain markets this morning. Soybean futures are near $17, corn at $7.80, wheat at $13. Why? And do you think prices will continue to trade higher?
Because of the war in Ukraine, we continue to disrupt world trade metrics. There's about 15 million tons of corn and 15 million tons of wheat that's not being shipped out of the Black Sea, and it's causing concern of short supplies in North Africa and the Middle East and even in Europe. South America continues to talk about lower crops, corn and beans, because of the dry weather. And here in the United States, it seems like the demand continues to be above the supply, given some of the supply chain restrictions. So I do think prices are going to go higher. I think that right now the funds are getting out of positions today because of a concern of China invading Taiwan and the close relationships between China and Russia. But at these price levels, we're not even trading U.S. weather this summer, and the fact that currently it's too wet to plant in the eastern corn belt and too dry in the west.
Steve, let's stay with weather for a minute. Last week, Drew Lerner from World Weather presented a special webcast for ADMIS brokers. What was his spring and summer forecast?
He laid out a plan based on La Nina oscillators, 18, 20-year sun cycles, that the dryness that we're seeing in Kansas and Iowa and South Dakota and Nebraska will continue this spring. And that there's a good chance, better than normal, that it'll continue in the summer, especially west of the Mississippi River. Now, he says if La Nina goes away or these oscillators turn positive, he'll be all wet and the conditions will be fine. But I think by the end of April, early May, we're going to know if we're going to have a drought this year or not.
Steve, the March USDA report is this week. What are the estimates, and does the trade really care? Or is everything centered around geopolitical situations?
I think that we will look 5 minutes at these numbers and just see if the USDA makes some bold changes, especially in dropping U.S. corn and soybean carryout and raising demand. They've been slow playing all this, so it wouldn't rule out that they would kick the can down the road and wait until April to make some of these big changes. But we have private analysts that are looking at a corn carryout close to 1,200 versus USDA's 1,540, and a bean carryout as low as 150 versus the government's 325. So these numbers are still bullish, tight supply, no room for any weather problem in 2022, either here or in Russia.
Alan, turning now to the very volatile financial markets, there's talk of a flattening yield curve. What are the economic implications of that?
Okay, well, first of all, the yield curve has flattened in recent months. Of course, traditional economic theory is that when the yield curve is flattening, it suggests a slowing global economy, which still appears to be the case. Some of the yield curve now has been a bit distorted by flight to quality moves, but the fact that the trend is toward a flattening is very indicative of what might be headed our way down the road. Also, we have some banks downgrading their estimates for GDP. So I think that the U.S. economy and the global economy will be slowing, not to mention the higher energy prices, which is always considered to be a drag on any economy. So for a lot of factors, reasoning, we are likely to see a slower growth here in the U.S. and globally as well.
And how certain is the 25 basis point rate hike, the Fed funds rate hike, with this next meeting on the 16th?
Well, I think it's rather certain in the sense that Fed Chair Powell said that he was going to do that in a rare moment of clarity. The Fed indicated last week, of course, this was at Powell's testimony before Congress, Powell said that he would support a 25 basis point hike in interest rates at the upcoming meeting on March 16th. Prior to that, there was some talk of maybe a 50 basis point hike. But when the Fed Chair Powell says it's going to be 25 basis points, that seems to be what the market is thinking. And in fact, financial futures markets now are predicting that that will be the case. There's a 98% probability that the Fed will raise rates by 25 basis points at the next meeting.
So, Alan, despite the somewhat hawkish Fed right now, the dollar continues to advance. Is this due to a flight to quality based on the current geopolitical situation, or are there other reasons?
That seems to be the main reason. From a geopolitical standpoint, of course, the U.S. Geographically far away from these geopolitical issues, but it also is the interest rate differential expectations. So even when the Fed cuts back on some of its hawkishness, other central banks are doing the same, which tend to offset the interest rate influence. But it does appear it's the flight to quality influence dominating now. And I would expect that the dollar, which now has just advanced to its highest level since May of 2020, will continue to advance.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.